Joining me today is attorney Pete Losavio. Mr. Losavio is a certified tax specialist, a CPA. He holds a Juris Doctorate and a Master's of Law in Taxation. We're here today to discuss solutions to your tax problems. Okay, I've heard various claims that you can pay the IRS 10 cents on the dollar and settle your debt. How does that work?
Well, what they're talking about, Carissa, is offering compromise. And offering compromise is not the magic bullet that is portrayed to be on TV. Quite obviously, if you have sufficient assets to fully pay the liability or have sufficient income to pay the liability, why would the Internal Revenue Service or the Louisiana Department of Revenue take less? Now, if you don't have assets to pay the liability, or you don't have the income, it's both asset and income. If you don't have assets or income to pay the liability, then it is possible to settle with the Internal Revenue Service and the Louisiana Department of Revenue for less than the full amount.
Is there any time that's better than others to solve your tax problems?
Well, quite surprisingly, the best time to do that is when you're broke. Because when you're broke, you don't have the asset and usually don't have the income to, that the Louisiana Department of Revenue would be looking for to pay the liability. Also, when you're broke and maybe your income is down, you also open up the possibility of bankruptcy.
Well, if you claim bankruptcy, does that stop the IRS?
Yes, ma'am, it does. Surprisingly, even the IRS is stopped by the bankruptcy and the automatic stay. The automatic stay stops the Internal Revenue Service from seizing your assets. Now, they can still do certain things. They can still make assessments. They can still demand a return. They can audit you, but as far as being able to seize the assets, it stops the seizure.
I think that most people would find that surprising. I never knew that. Are there different kinds of bankruptcies that make a difference when you're doing this? Yes.
Basically, there's two types that would be available to the individual. There's Chapter 7 and Chapter 13. Chapter 7 is what we commonly call a straight bankruptcy. Now, it used to be before they had the Bankruptcy Reform Act, anybody could take Chapter 7, but now you have to meet certain income tests in order to be taken Chapter 7. So not everybody can take Chapter 7. And sometimes some people have to take Chapter 13, which is commonly called a wage earner plan. The difference is with the Chapter 7, you're saying, I just want to walk away from this. I want to get a fresh start. You take my assets, you take my liabilities, I'm out of here. So it literally allows you to walk away from qualifying tax debt, completely discharged. When you look at a Chapter 13, you're looking at paying that over time. You usually pay that out over 3 to 5 years. You're saying, I want to keep my assets and I want to pay my liabilities.
So how then does a Chapter 13 differ from an installment agreement if you're going to keep your assets and pay it over time?
Well, there's one big difference. In a Chapter 13, you're not paying interest and penalty. On an installment agreement, you remember I said that was one of the disadvantages.
Oh, that was the last amount of money that disappeared was the taxes and penalties.
Yeah. So, with the Chapter 13, you're not paying any interest and penalties, and so therefore, it makes it easier for you to repay the debt because, the interest and penalty makes it harder to repay the debt over time.
So are all taxes dischargeable in bankruptcy?
No, only certain tax debts are dischargeable in bankruptcy. Basically, the basic requirement is that the taxes must be more than 3 years old. You must have filed the return more than 2 years ago, and there hasn't been an assessment within 240 days.
So we talked about interest and penalties. Is interest on a tax liability dischargeable in bankruptcy?
Yes, interest on a tax debt is dischargeable in bankruptcy if the tax is dischargeable.
Okay, and then what about the subsequent penalties?
The penalties are also dischargeable if the tax debt is dischargeable.
So we've talked about how people get in trouble with income tax and what can be done to help with that. there's another kind of tax that I've seen people, especially as a small business owner, I've seen other small business owners get into a substantial amount of trouble with payroll taxes. To start with, how does that happen? How do they get in so much trouble?
Well, you being a business owner, you know that when money gets tight, you usually look at making just payroll and not paying over the withheld portion. It's kind of like using a working capital loan. You're using the money that that was withheld out of the employee's check, and rather than sending that to the government, you're just making net payroll.
And some small businesses don't see that, and it's hugely important.
Yeah, that debt can really add up over a short period of time. And what happens there a lot of times is the business ends up failing. And when the business fails, then the government starts looking to try to collect that debt from the people that were involved in the business.
If the business doesn't fail, what can the IRS do to that business? I've heard some horror stories on this one.
Well,
to a small business that owns payroll taxes. They don't mess around.
No. If it's a significant amount, a lot of times the IRS will close the business. And I've had clients that have trouble understanding that, but it's very simple. If the IRS shuts the business down, they know that liability is not going to grow.
Well, it has been wonderful having you on the show. I know that many of our viewers are going to want to talk to you more about this. Pete Losavio has the knowledge and experience to help you. For more information, please visit his website at www.losaviodejean.com or call 225-769-4200 for a free, no-obligation consultation to determine if they can help you. Thanks for coming on the show today, Pete.
My pleasure.
That's it for this edition of Ask the Lawyer. I'm Carissa Farley, and we'll see you next time.